The Bank of Baroda did report a resilient quarter this time. However, the bank did report a loss during the quarter. This was largely on account of the new tax regime. Having said that, the profit before tax were the highest ever according to the management. And if you look at the stock is under pressure in trade, down close to around 4% in trade. Besides that, on the positive front, we also did see a fairly good performance on the operating profits. The operating profits did grow to 6,200 crore versus a 4,900 crore the same quarter last year. And on the asset quality front also, it was a fairly resilient quarter. Q4 GNPA ratio did come down to nearly around 8.87% versus the proforma GNPA of 9.63% in the last quarter. So yes, even from an asset quality, it's fairly resilient. The FY21 slippage as well as the credit cost ratios have also come down. In fact, FY21 credit cost ratio stands at 1.68% versus of 2.35% for FY20. And if you look at State Bank of India's FY21 credit cost, it stood at nearly around 1.12%. So I would say that for within the PSU banks, Bank of Baroda is one bank which has also performed fairly well on the asset quality front. The slippage ratio also for FY21 has come down to 2.71% versus 2.97% for FY20. In fact, the board also has gone ahead and approved additional capital raising worth 5,000 crore. This includes 2,000 crore via shares as well as QIP, and nearly around 3,000 crore would be via AT1 bonds and Tier II bonds. So yes, they would of course be raising capital, but management also did mention to ET Now that if they are looking at their overall credit cost, well, they expect the credit cost to be fairly contained even for FY22. They guided that the credit quality for corporate sector should improve, and they expect reduction in credit cost for the corporate sector to offset the rise in MSME and the retail sector, because yes, they are seeing stress on account of the COVID second wave, especially in the MSME and some amount of the unsecured credit business. Management also stated to ET Now that the impact of the large corporate segment is likely to be less in COVID second wave, and that should help save a good amount in their credit cost. They also stated that they would be growing much more quickly in the subsectors of retail and, for instance, the housing loan, for instance, the gold loan and the other segments. And if you look at their FY21 domestic advances, that grew close to around 5% during FY21. So they did state that if at all the economy recovers going ahead, they should be expecting to grow in line with the industry, and they expect domestic credit growth at overall credit growth at nearly around 7 to 10% for FY22. So yes, a fairly resilient quarter coming in from Bank of Baroda. Stock slightly down in trade today.